Hello, everyone. Yes, we are live both on our webinar platform and also on our YouTube channel. So, welcome to our webinar. My name is Olena Gryniuk. I'm the CEE director at the SME Banking Club, and from this year, also founder and director at the Forward Digital. And this is the platform where we promote and develop the digitalization of receivable finance and build active community of experts eager to drive change in receivable finance. And this is our next webinar within the World Digital project, and we speak about digital factoring. Today, we will speak about how to offer effective factoring for SME customers. And my guest today is Miroslav Pavelek, product manager at Malcolm Finance from Czech Republic. Hello, Miroslav, and welcome.
Hello, Olena.
Yeah, before we go to our topic, let me very shortly mention organizational information. So we plan our webinar for 45 minutes. We start from the presentations, and after that we will have a Q&A session. So please type your questions in the chat, even during the presentation, during the webinar, and we will be able to answer all of them in the second part of the webinar. And we are recording this webinar, so right after we finish, you will receive the link to the video and presentation as well. So let's go to the topic. And before I pass a mic to Miroslav, I would shortly share some results on what is the status quo and what is the situation with the digital factoring or invoice finance in the CE region. And yeah, we did such a study, which is an annual one, and which covers mainly Central European region. And also we covered Spain this year because one digital factoring coming from Romania called Instant Factoring entered Spanish market with the offer of the digital factoring for SMEs there. And we analyze only functionality among or within the study, so we don't analyze UX of the applications. Maybe we will do it in the next years, but as for now, this is the functionality analysis. We analyze 17 parameters, and probably, if you know, based on that, we also have our annual ranking of the best digital factoring solutions, and we award the best digital factoring solutions in the region. And Malcolm Finance this year won the award in the category the Breakthrough of the Year, and that's why actually we are doing this webinar. So I would say that during this year, Malcolm Finance and former, they were called Fortrans Factoring, managed to digitalize their journeys for SME customers within their factoring product. And if to give some numbers, 30 factoring companies offer digital application, we can say in Europe, digital application for factoring, so the customers can apply to get invoice financed within online or mobile channels. And this is mainly online channels, so 24 factoring companies offer this digital journey online. 4 of the factoring companies offer both in online and mobile, and 2 only mobile. So we can say that this is the online customer journey, and online channel is developed the most at the moment. And 21 companies offer fully digital factoring process. So this is 3 companies more compared to the previous year. And if you compare to the year of 2020, when we consider that the development of the digital factoring product started or had a great push, let's say, we can say that this is plus 12 companies. So the main companies or the main countries where these offers are available are Poland, with 10 factors offering fully digital factoring process. After that, we had Hungary, Romania, and Serbia as the leaders. Here I would share the slide how the distributions and which companies offer both fintechs and factoring companies from banking groups or banks as themselves. Here we have representative of the Malcolm Finance, who started their operation in Czech Republic and now present also in Poland and Slovakia. Yeah. So I think on this words, Miroslav, I'm passing a word to you. Please tell us what's your product and how you offer effectively factoring to SMEs, and then let's have a discussion on that. You're welcome.
Hello everyone, thank you Olena for the introduction. I will now share my screen and give me a second. Yeah, I should be sharing my screen.
Yes.
Hopefully, great, thank you. So, give me a second. Okay, so thank you Olena for the introduction. Just as I saw some of you joined a little bit late, I will introduce myself briefly again. So hello everyone, my name is Miroslav Pavelek. I work as a product manager for a company called Malcolm Finance, and today we will discuss how to offer effective factoring solution for SMEs. This presentation will be divided into three main parts. In the first part, we will look at the why banks need fintech. Second part will be about what the SMEs expect. And in the third part, we will combine both of these needs and we will look at how product meets expectations. We will look at it at the brief case study for logistics. So that's the agenda for today. Before we dive into the topic, let's first look at the Malcolm Finance in numbers. So as Olena mentioned, we are serving SMEs in 3 markets. We have started in Czechia, we have then expanded to Slovakia and Poland, and currently we have more than 3,000 registered SMEs on our platform. During the time there, we have already financed more than 170 million euros and more than 180,000 invoices. And one thing I really need to mention, highlight, is past year we have already established one cooperation with one of the top banks in Slovakia. I cannot tell you exact details right now, but it's very important because during following 20 minutes, we are going to share with you what we have learned on the journey. So in the beginning, I would like to start, why do banks need fintech? And there are many reasons, and during the next few minutes, I would like to cover the main ones. And I would like to start with the segments innovation part, because we all know that banks are really traditional businesses and they offer stability, they offer a lot of things and are really good at them. But well, one of the ways how they can expand what they are doing, how expand their operations and portfolio, is basically by cooperating with fintechs. And one of the things how it can be achieved is by reaching underserved segments, because many fintechs, including us, excel at targeting specific segments that banks are overlooked for many reasons. Like some of these segments can be micro SMEs or early stage businesses. And by collaborating with fintechs, they can simply reach these segments. And by doing this, they can also accelerate the innovation, because these fintechs, not only that they serve underserved segments, they use innovative ways how to do that. So in this combination, this is how the banks can reach underserved segments and innovate themselves. And this may help with staying competitive on the market and with also many other things. So two multiple things I'd like to mention is, first one is, when the banks offer multiple products, it increases the stickiness and the customer retention, because as the fintechs prioritize the UX and UI, that means the user experience, how it looks like, it helps the customer. They feel like they are really well served. They see good solution. They have more reasons to stay with the bank. As the fintech are usually focused really on the digital first approach. And not only that, also with the fintechs, as I mentioned, the fintechs are quite often really innovative, and that also can help really with the streamlining operational efficiency. Sometimes the banks can expand into this product themselves, but it may be much better for them to not reinvent the wheel, but go for fintech, which is already did all the exploration, all the discovery. They already tried various tools, and they found what could work like. That could be the automation, AI. It could be machine learning. It could be any really different out-of-the-box thing, because fintechs are usually not so much burdened with the compliance, regulation, other things. So banks can leverage these different ecosystem of fintechs to integrate these technologies quite swiftly. And this may lead to revenue stream diversification, and in general, even the diversification by catering a riskier customer base. Because as I have mentioned on the two previous slides, this can help you in using partnerships with fintechs can enable new products, new services. So not only this help the customers to have more products and increase the retention, it also helps with the revenue streams, as new product and new service can be new income source. So this really help to diversify the income sources, and that means that that banks still can focus on their core offerings, on being competitive in their current products, and by this they can enhance the product portfolio. So that's for the product portfolio part, and it's not only about more products, it's about more segments. And by that, I mean catering a riskier customer base, because fintechs quite often they focus on assessing and managing risk for traditionally underbanked or not so conventional customer profiles by using alternative data sources and really specific and innovative underwriting models. So by partnering with fintechs, the banks can, serve these clients of the balance sheet, so they can still focus on, let's say, on the more stable customer base, and they can leave out the less stable clients to their partners. So to sum it up, the main benefits of cooperations of banks with fintechs, they are the higher acquisition, because using fintechs they can reach new segments and expand the portfolio, stickier portfolio, that when there are more products which have really good seamless experience, it helps with retention, loyalty, NPS, and others. And only that, they mentioned, it can also directly help with the revenue, and overall it can help banks to stay innovative by partnering with innovating fintechs which offers innovating products. So this is the summarization of the first part. Now I will jump to the second part, and that's what do micro SMEs expect. And at first, I will start with really the first thing, and that's the onboarding. What we see from experience, that SMEs, they are quite often small businesses, family-owned, and they really focus on their core work, whatever it is. And maybe they don't have time for managing finance, all the accounting things during the day. So when they have time to focus on finance and financial services and financial products, it can be in the morning, in the afternoon, or late in the night. And for all of these options, they require to have seamless onboarding way, how to quickly, without any issues, onboard to the platform. Because they don't, when they do it in the evening, there is no one they can call, ask for help. It should be self-serve. That means it works for them correctly, without any questions, without any needed human assistance. So this is one of the things we see as the first step during the journey. And for example, our platform allows businesses to complete the whole onboarding process digitally, so they can access our services, and within few hours from registration. And when we talk about onboarding, it's not only about getting access to the platform. It's actually about understanding what they will pay for it. So that means the system itself and the contract, the contract and the pricing, they must be really transparent and easy to understand. As there shouldn't be any footnotes, any hidden fees. It should be really easy to understand and really visible for the clients what they are going to use and what's going to cost them. And also, when we talk about this, they need to understand the pricing, but they also need to understand what must happen so their invoice is approved. So this is helping both them, as when they know the rules they need to fill and they pass them, it helps us and both them to have high approval rates. So that's the first part. Second part, even when it's transparent and easily seamless, and everything should be done as simple as possible, still, sometimes the SMEs need to hear some human voice to see the business is really real. And, they may have some questions, they may need some help, they want to find maybe alternative way. And for that, what we see is that the SMEs really expect reliable, personalized support. It means that when anything happens or they have any questions, when they just pick up the phone and call us, at first they need to know phone number which they call. So it should be really transparent communication, who and when can help them. And when they actually use the tool to contact the fintech, they need to get answer as soon as possible. And they don't like general advices. They really need tailored advice to their needs. So the support is really needed. And other than that, it's only about being offering seamless solution, being transparent, simple, and helping where they need that. We need to be also be proactive on that. And by that, we mean that we need to empower the businesses to grow, to scale the operations. And to achieve that, apart from the financing, our platform also offers additional tools and insights. They can help businesses focus on their core activities. So it's not only about factoring, it's also about the other things which can help them succeed in the business. So if I can summarize it, the four main things what micro SMEs expect are high approval rates, easy pricing, best customer service, and fast financing. We really thought about these four metrics because we really believe they are important, and that's why we focus on them. So I'm happy to say that when we jump to our product, we actually, I believe, are really succeeding in all of these four expectations. Achieve them. What does it mean? When we look at the approval rates, most of the invoices in our system are approved. So I believe the 95% is really a high percentage. So when clients upload something, they can be confident we will look at it and we will process it fairly, and that will sure leads to approval. As I previously talked about easy pricing and being transparent, here you can see what our full pricing for financing a 30 days invoice in Poland. It's one number. I believe it's easily understood by every client. Everyone who looks at it can really briefly see what does it mean, how much it will pay, which really shows how easy transparent it is. And when we look at the NPS, it's basically how our clients are happy with us. We did the study this year and last year because we are committed to making our clients happy. And we can see that we achieved 9 of 10. That means most of the clients would really recommend us to others. And we shouldn't forget on the main value of the factoring. And that's basically, fast financing and actually improving the cash flow. And on that, we can say that we really save 99% of the maturity time for our clients with the factoring. So that's This was the bridge between what the SMEs expect and how we achieve those expectations. And now I would like to spend next few more minutes on brief case study, how this can look in the reality. So at first, I will mention that we're going to focus on the logistic market. And there are two reasons for that. First one is, especially in logistic markets, we can see that the average maturity of invoices is 60 days, which is really quite long. When you imagine you make a lot of, when you want to transport something from place A to place B, you already need to spend a lot of money on the cars, on the fuel, on the people, and you will get money for the invoice 2 months after you have done the job. And even that, the maturity of invoices is sometimes much longer, like 90 or 120 days, which is really long. So what does it mean? That about 25% of all SMEs bankruptcies are caused by lack of liquidity, because really this waiting a lot of time for the money is really troublesome. Especially in logistics, we see that for carriers, the situation is really more serious because majority of the companies are really small. So this means that every day the SME logistics have extreme pressure on liquidity because, as I said, because of the it really requires substantial investments before actually doing anything and earning money. And this is only the happy part, like optimistic scenario, because sometimes life happens and there may be unexpected expenditures, like truck breaking down, so you immediately need cash to fix the car, fix the truck, and start working again. So we see the need for financing is really acute. And so this is the reality our clients from the segments live daily. And next, the question is, the next part is, how do we or our products help carriers? So first thing I'd like to mention, and it's really the obvious part, is digital invoice factoring. Factoring itself is really aimed to alleviate the pressure on operational capital. It's to help our clients with the cash flow. However, as I told before, SMEs not expect only factoring, they expect something more. How the tools, platforms can help to grow their business. And that's why one of the things we offer is that the carriers in a system can verify their business partners at any time in our client zone, even prior to taking a new contract. So before they jump on the new business, they can actually look at the obligor, their customer in our system, and see what's their typical payment behavior, how we look at them from risk perspective. That really help them to find the correct partners. So this is the general. Now I'm going to jump exactly into a few screenshots. How does our product really look like? I'm going to show you for the next few minutes. It's basically few steps from our product. So the first step is the registration. I just want to mention that the first step of the registration is really easy. You just enter your email, then you click send, you get invitation, and after you confirm the email and confirm the phone number and others, they can already log in. So the process of registration and creating account is really simple. And just these two steps are required to actually see the client zone. So you can see here, even before they went through KYC and related email checks, you can already see the platform. As you can see on the screenshot, you can already see how it looks like, how the platform looks like. They can see the context for customer support. So whenever they have any questions, they see contacts, they see who can contact, who can help them. And at the top, they can see that what they should do. They can already use the client zone, but to use it fully, they need to go through KYC or ML. Basically, the process means that they need to take the documents like ID and just show it online on the camera. And the system do this magic, compare their face to the IDs, few more things, And then this is how we verify who's really using the system. And last step of onboarding is contract. On these things, one thing I want to mention is, as I told, that the system should be transparent. It's also why we are transparent. That means before we finance any invoice, clients need to sign a factoring contract. However, the contract can be signed anytime. It can be done fully online, and they can spend as much time on the contract as they want. There is no pressure on them. And here, just on this screenshot, you can see they can have multiple contracts. They can look how it looks historically, compare it. So again, it's fully transparent. And I just want to show a few more things. First one is basically the last step of the onboarding, and that's basically financing. So here what you can see is we can see already the upload invoice screen, where they can first they select the customer, then they write down invoice details, and then they fill out all the information, just send upload, and then it's uploaded to our system. After it is done, or whenever they sign in, they can see on the dashboard the status of all the invoices, which are awaiting acceptance, which are pending verifications, which are already active. So whenever they sign in, either from desktop or mobile, they can see overview of all invoices. And as I mentioned that, one of the things I want to mention is what we see a lot that clients, they really want to know what's the status of invoices. So whenever they filter the invoices, they can look at the invoice and see the current status. And the status is not only purchase or not, they can see even the progress. So for example, when there are multiple checks, they can see which checks are already done, which not. For example, on the screenshot, you can see that the invoice is waiting to be assigned for checks. So it's really first step of verification, and you can see that it's 0 from 3. That means that at this time, if there are still 3 more checks which must be done. So that was the quick introduction of our product. And last thing I want to mention, in general, to come back to summarize what I have told about today, I want to mention the drivers of successful cooperation for banks. First one is enhanced SME offering, by which the banks can strengthen the client relationships, reduce churn, and position the bank as a trusted long-term partner. Second one is competitive edge, because by diversifying their offerings, they can enhance their reputation as really someone being innovative and really competitive on the market. And by having the solutions and not only offering them, but also trusting them, it can also help with scalable growth and new revenue, as this can help to help SMEs during all stage of their life cycle, even when they are small and just starting out. These products can help them to grow, so they become bigger SMEs and they can use more products. And last thing I want to mention is really focus on the quality, as the fintechs quite often focus on good UX, good user experience, good UI. This also helps a lot with the overall experience. So that's it. Thank you all for listening to me. And now we can jump into any questions which may have been.
Thank you very much, Miroslav. Yes, we do have questions, and I will read the first one. These questions are connected with the product, and we have 2 questions on the pricing topic. I will read the first one from Gabar. So you mentioned automated and transparent pricing. Is there any way supplier may be able to bargain or get better price without human intervention?
Thank you for the question. So, no, we use AI, but we still don't have any AI sales managers. So, like, there is no way how to bargain at the moment. So maybe this will happen in the future, but not right now. However, technically speaking, our solution offers or can offer a specific pricing based on the segment, or when we see that the client is from specific partner for this, we may offer better pricing for him automatically. But in general, there is no easy way how they can just say, I want better price, and they will automatically get it.
Okay. So you're not open for the individual pricing, yeah?
Like, not automatically. Of course, when they call us, our sales can discuss a lot, but this is something where the human touch is still needed.
Okay. Next question from Peter about your pricing. So you showed that 1.99%. Is it your full price? Does it include everything? Like, does this mean you don't have a daily rate? If, for example, if payment is done after 30 days, a fee for credit limits, a fee per invoice, or anything like that?
Okay, thank you for the question. So the 199 is the price for the financing. So there are no hidden fees. In general, when everything's going correctly, this is the only fee, only price we are paying. There is only one exception, and that's when there is delay in payment. However, we know from transport industry that it's quite common that the invoices are not paid for the first 10 days because being few days overdue is quite standard thing. So we don't even charge any late fee for the first 10 days. Only after 10 days overdue, we are starting to charge late fee.
Okay. And this late fee is how much?
It's 1.5% for 10 days.
For 10 days. Okay. Another question from Peter. What do you do when debtors do not accept that your customer is working with factoring?
Okay, so this is one of the things we cannot. Okay, in this case, the clients should call us and we should discuss it individually. We don't have any, let's say, there is no automatic solution for that, but they're always trying to find the solution how we can help our clients.
Okay. Another question from Gabor. Do you accept if the contract is printed, signed, and then scanned back, or original document is needed? Is it common to have e-signature in the region?
Okay, so I can say multiple questions. So I will start with the first one, and that's type of contracts. Usually, we prefer full digital contract because that's the easiest for all parties. And this is really scalable, modern, digital, can do it anytime we want. So that's our preferred way. However, we understand that different clients have different needs. So the brief answer is yes. We also accept if the contract is printed, signed, and scanned back. And this is something which must be discussed on an individual basis, but we definitely support this. We believe the digital solution is best for the scalability, the full digital solution, best for scalability, but really we are open to different clients' needs. So that's for the first question. And second one is if it's common to have a signature in the region, and the brief answer is yes.
Yeah, I agree. All right, we have the next question from Milian. Thank you, Milian. And again, about your products, are you doing non-recourse factoring? If so, are you able to charge late fees for these customers? It means that you do the collection. It means that you don't ask. Yeah, you understand.
Yeah, I understand. I like that we're really getting deep into the pricing, all these edge cases, and when it goes bad.
The hardest topic, the hardest topic.
So, in general, when there are, from experience, there may be many edge cases, what can happen. So I would say this is best to, again, discuss individually with our people on separate call, because, we can spend on all the things what go wrong a lot of time. But just to put quick answer on this, first thing I want to mention is that most of our invoices are insured. So the clients don't need to be afraid that when something bad happens, we immediately charge them all the money and all the thinking. So on these terms, there shouldn't be afraid.
Mm-hmm. But in general, your standard product is recourse factoring, right? And non-recourse is the standard one, or this is individual basis? How would you define it?
We are doing, let's say, the fuel factoring, non-recourse one. That's the standard product.
Non-recourse. Okay. Okay. Okay, Miroslav, I would like to ask you some questions about actually partnerships with the banks, because you mentioned that, yes, and I wish you good luck with the partnership. We do have several examples in the CE region when banks or factoring companies from the banking groups cooperate with factoring fintechs to offer actually this digital factoring journey, especially for their micro customers when they don't have micro factoring in their product. Because, as you also mentioned, this is win-win. The fintech can serve the customers in a cost-effective digital way. This is what SMEs expect on the market, but also it allows banks to retain these customers in their portfolio, right? Because if we think that the customers do need this micro digital factoring, then they can switch to the other banking groups who, for example, already offers this on the market. And in this case, this will mean that the customer switches not only for the factoring product, but for a whole bunch of operations and transactions and all other products. So my question, and we do have such some, I mentioned several examples. Probably the most discussed, I would say, this year, it was the cooperation in Poland between BNP Paribas factoring and factoring fintech called Monevia. It was launched in spring, and I know that both parties are very, very glad with this and happy with this cooperation. So my question to you will be, what is your model of the cooperation, or how the process could look like? Do you have full integration with the bank or factoring company, and maybe some partial integration, and this is just a lead generation scheme? What is your preference? What is your experience or your target in that? And what are pros and cons, and also probably challenges here?
Okay, so I will mention two things. First, I will talk in general, and then I will talk about the preferred way. So in general, we as fintech, as factoring company, we are more flexible than bank usually.
Oh.
So we can do anything, like just only lead gen or go, to the full integration. It really depends, what are the options on the bank side. So it really depends, if they just want to see if there is some interest in it. We can start with simple banner, which is really simple, and as a first way, it can, help to see the bank if there's interest. However, what we prefer, what we prefer, and I see the biggest point is being fully integrated, fully digital.
Yeah.
Because let's see, when you look at the factoring, let's say there are two main flows. First one is onboarding, and second one is actually uploading invoice and seeing the status. So for the onboarding, even right now it's quite fast. You can go through all steps, let's say in 10 to 15 minutes. But the banks can share their customer data with us. So that means the registration, like when there are steps like input your name, email, campaign information, and so on. Most of these steps, or even all of them, depending on the country, can be skipped. So it's possible when the bank is willing to share their data and the clients give us consent to have the registration by one click. So you can just, confirm, hey, you are really coming to the fintech. They say, yes, I agree. Bam, they are redirected and they are fully onboarded. And by this full integration, while it requires much bigger cooperation from both sides, it leads to the best customer experience. So the registration can be done in a few clicks. And for the uploading invoice itself or invoicing, what we see was the option that currently in our system, they can see all the invoice statuses, what's happening. But if the bank is willing to do, we can share this data with them. So the clients can see in the bank interface, they can see overview, of their account, so on. And they can also see the balance of the factoring product. So to sum it up, we prefer the full integration because we believe that's best for the clients, but we are happy to start even with something less.
Okay. Okay. And product-wise or price-wise, I would say, what is how it could look like a business model, let's say, cooperation? Do you bundle it with some banking products, or this is success fee or revenue fee? How can it look like?
Okay, and the answer is it depends. It can be also everything. And
Okay.
why I'm mentioning that? First one is it depends, how tight the integration is. So
Mm-hmm.
obviously the business model will be different when it's only lead gen, one banner on the website, versus when it's full integration. So
Mm-hmm.
that's the first main criteria. And second one is it depends on what the bank want to achieve. It really we need to align on what our goals, what's our goals, what their goals, and then we need to find business model which works for both sides.
Mm-hmm. Mm-hmm. What are your sales channels at the moment?
At this time, what I will mention is, we are definitely, as we offer full digital solution, our
Mm-hmm.
sales channel are also mainly digital. So,
Mm-hmm.
we use all the standard digital channels. So, you mean all the social networks, so on, advertisements, really typical stuff on the
Okay.
digital. And of course, we also, as we see that the human touch also needed, we also have sales department,
Mm-hmm.
which contact potential clients directly.
Mm-hmm.
And what we see as a one additional channel is really the partners.
Partners. Mm-hmm. Mm-hmm. Okay, and you focus because you talked about the transportation and logistics sector industry. So do I understand correctly that this is your main or targeted industry, or can you finance some others?
The short answer is yes. Like the logistics, that's the one where we have the most expertise, but we definitely can, also cater to different segments
Mm-hmm.
for SMEs.
Mm-hmm. Okay, okay. So probably then last question from my side to wrap up the session is tell us what are your plans for the nearest future, for the next year, for the next years.
So I will mention two things, like two main things. First one is quite standard one, like we are committed to deliver the best client experience possible.
Mm-hmm.
So it's really continuous improvements on our system, both what clients can see and what they cannot see. So we're always trying to be faster, to purchase everything faster, to help our clients faster. So that's one thing. We are continuously listening to feedback, and based on it, we are improving our product, either what's visible, how it looks like, or what we do in behind to be faster and clients can feel more in the control and more trusted. So that's the first part, really continuous improvement.
Mm-hmm.
And the second one is, as I already hinted, we are starting the partnership with one of the banks. We also see that it's a really interesting channel for us. So we expect that in the future there will be more bigger partnerships which will help us to scale and help both us and our partners to help our clients.
Mm-hmm. Thank you very much, Miroslav. Thank you very much for today's contribution. Thank you very much to all our attendees. Thank you for being so engaged and active during today's webinar. And this was actually the last webinar this year. Thank you all for being part of the Vo digital community this year, and hope to see you next year. So have a happy holidays and see you. Thank you very much, and bye bye.
Thank you, everyone.